everybody, I hope you all had a great and profitable week of trading. I know that for me it was definitely a roller coaster. I had some awesome gains, but I also did a couple of things that I wasn't so happy about when I'm looking back on it now. But anyway, guys, I'm going to just jump straight into the $1,000 account for the week. Let me know down in the comment section below, by the way, if you like just seeing the stock segment very first or if you'd rather see news first. I'm trying a little bit of each thing out each week as I upload, and that way you guys can let me know what you like better down in the comments below. And one last thing, don't forget to hit that subscribe button and hit that like button for me, as it helps YouTube know that you guys do like the videos. Now, without further ado, let's just jump straight into the stocks. Okay guys, jumping straight into it, let's talk about this big options win that we had on our love calls. So let's go ahead and take a look at what happened on this trade and how we made out so profitably. We were up 273% on our calls. I will show you a video of when I actually made the sell on this. That way you can see it for yourself that we really were 273% up on this when we sold. So let's talk about how we did this. So we got in here and actually bought this stock back on 6/24. Well, we bought this call rather. We bought the July 16th, 2021 $85 call option on 6/24. So let's go ahead and jump back into this chart and we can look at how that worked out for us on 6/24. So we'll come into the day chart here and we'll scroll in. And 6/24, I was watching it on 6/23. Go back last week and you can watch. I was watching this on 6/23 and I made my entry here on 6/24. And if we come back on this hour chart, I'll show you. I bought here on that very first candle right there, right before this thing took off and gave us a very clear bull flag indicator. From that point, if we go back to the day chart, we bought here on the flag indicator, then we just continually had run after run after run all the way up onto 6/29, and then on 6/30 we started to see just a teeny bit of softening happening here. And what happened is I actually wound up taking my profit on 6/29. We were up over 300% actually on the 28th. And when I started to see the softening on the 29th, I didn't want to get too much greedier and I hurried and pulled my profits. On my own personal account, I'm still holding one of these $85 July 16th call options. And today, if we go back into here, you can see we took a massive dump back down to this $76 resistance right here. And let me just tell you, that call option took a massive dump for me today. Hopefully we start to see this rebound and come back like we have seen in the past. I'm pretty confident, which is why I held on to it anyway in my personal account. But on this account, since it's only $1,000, I want to teach you guys, don't be greedy. Always take that when you see softening happening on this run or a flattening. Take your profits if you have them. In this case, it was 273% and we closed out on it. Right after that, on 7/1, I actually wound up assuming a position in Love. Love was one of the hot stocks we were watching last week, and I wound up using some of this profit here to purchase a share of Love. So we have some of that in our account now as more of a long-term investment. All right, so now let's talk about the stupidest thing I did this week. I messed around with Workhorse quite a bit. I was chasing it, and guys, don't do what I did. Don't chase these plays. I was feeling good about that Love option being up 300% on that 28th, as you can see, and I was just being dumb. Really, I shouldn't have done this. I got in here, saw that it was running, tried to catch it, and just got totally burned right off the gate and lost 20 cents a share on all 6 shares that I bought, because I wanted to swap it into an option because I was feeling really good that day about options and being a dummy. So I bought it hoping that the next day we would see a continued run on the 29th. So I bought in on the 28th. Let's go and take a look at what happened to me here. So I bought in here on the 28th like an idiot on options. There's so much implied volatility too. Like, I knew there was implied volatility, but I was so hopeful that I would get that run that I wanted on the next day that I bought it anyway. So here it is, 28th. Bought in somewhere in this area. I have no idea. I bought in here at some point, changed it out for a call at the later half of the day, going, hey, maybe the next day we'll get some more running happening. Well, what do you know, I was feeling super confident all the way through after hours. We had a nice run in the morning and immediately just started getting crushed. And you know, I wasn't very smart. I sold out of it pretty quick, thinking, man, after we broke that resistance line right there, I'm going, man, we're going back down all the way, gonna test this 15 again, so I gotta get out. So I chased it and I sold. And then what did I do? I went ahead and decided to buy another option on this guy again, because I'm going, well, look, we're starting to settle down a little bit here and we're getting some selling action. So I nabbed it right there by the end of close, going, hey, maybe we'll get another nice boom and I can make up some of that money, hopefully tomorrow morning on the 30th. But you know what? That didn't work out for me either. It never does work out when you chase these stocks around, guys. I wound up selling again for another loss and wound up just paying fees and everything. And guys, I wound up trading Workhorse and losing $60 this week, okay, of the account value. So don't be stupid. Don't play the way that I was playing while I was feeling good because one of my options are up 300%. Do as I say, not as I do. That's what I'm getting at here. I was being dumb, chasing this guy around because it had so much activity. And truthfully, it does have 35% short interest right now. So to me, I'm going, hey, it could be squeezing, which is why I was loading up on the options. If you take anything out of this, don't chase stocks. They're never going to conform for you. When the run is happening, then unless you've already been in it, you're probably too late. And just don't chase it. It's not worth it. So the next trades this week that I actually did make some good money on were Hut 8 mining, believe it or not. So I went ahead and bought in on these guys on the 29th. So let's go ahead and take a look back here on this Hut 8 mining. Here we go, 29th. So I was just feeling like looking at them on a year-long day chart, I've felt for a while that they're just trying to get ready. And they were getting ready for a run. In fact, I looked at this and I go, here's a touch, and here's a touch, and here's a touch on our resistance line sitting at 350 here. So to me, I'm going, all right, we had a triple touch. It's a bullish indicator. We're starting to see this little rotation up in crypto. There's no reason this mining company should be down. They have great fundamentals. They're making money. They're acquiring more and more mining equipment. So I went ahead and bought in here on the 29th. And let's go back. 29th, right here. And I was feeling pretty good just as a long-term hold on it, truthfully. And to my surprise, the very next day, on the 30th, we got this beautiful run here on them. And I was up quite a bit on them that second day. So I wound up just taking that position and closing it. So as you can see, I bought in at the average price of $3.93 and was able to close it the very next day at $4.58. And then what I did is I took those profits, I guess you could say I took those profits, and I put them into options. I put them into some Hut options. I bought 2 of the contracts for July 16th, 2021, a $750 call. And so what I did is I bought those because they were only $15. So I'm going, all right, I just made this money here on Hut. I can buy 2 of these calls that are short term. We have a whole bunch of this volatility going on here. Maybe this thing's about to skyrocket as crypto takes off, as it is extremely undervalued. So I picked up 2 of them here, right, for 15 cents. And then I also picked up a October 21st or an October 15th call for $5 right here. Well, that was at the end of 6:30. The very next day, now we're talking July 1st, right here actually. This was today. We took off, had a great morning, and we traded pretty much sideways the rest of the day today. But what I did was I wound up actually selling this call, the October 15th call. I sold that today because I made a quick 20 bucks. Again, just right there. So basically, between my trades here with my shares and then my good options trade right here, making me the quick 20 bucks, a quick 20% in other words, then I was able to buy these 2 calls on Hut 8, the short-term calls, for a relatively inexpensive price. And my plan on those is to just hold them and let them play out, because the very most I'm going to lose is $30. But if I start to see any upside at all, I'm definitely going to take my profits on them and get out of them. So let's go ahead and take a look at how that actually is looking here. Right there they are. We're currently down 16%, but we're holding both of them. We're gonna just let them play out. Hopefully next week we continue this awesome run. Hopefully tomorrow, which is Friday, we continue this awesome run, and maybe we can print some money on that hut call. So now let's talk about all the stuff that I actually picked up this week. So I picked up some Redfin, I picked up some Nova, I picked up some SoFi, I picked up some NEO, and I picked up some AMC because I gotta show some love to the Wall Street Bets community. Alright guys, so I went ahead and picked up Redfin on the 29th. I bought 2 shares at $64.34. I'm holding those long, everybody. I like Redfin as a company, and my plan is to essentially hold these guys out until I feel like this tech rally and growth rally is done. It's a great growth company. I see a lot of potential with that company. It's essentially like Zillow. Go check them out and check out their fundamentals. If you want me to make a video on them or any of the other stocks that I mentioned this week, please go ahead and let me know down in the comments section. I'd be more than happy to do a deep dive on any of these. All right, the very next company that I wound up picking up is Sunnova right here. They are a solar company. I wound up picking up 2 shares of them at $38. And then the next company, where are we at? SoFi, here we go. I picked up 4 of them on the 1st, so in other words, today, at the great price of $18.70 with all the Wall Street Bets stuff going on. I feel pretty happy to be in at $18.70, as I do actually like this company long term. I'm not trying to play any shorts on this. I'm trying to be long term on SoFi. I feel like this is undervalued at $18.70, and that by the end of this year we could see them potentially trading around, my price target's like $22, right? We opened up our love position, obviously, and then we opened up our NEO position right here as well today. We're taking advantage of the little dip. I'm really not too certain how I feel about buying NEO at this level of 51.78, but with all the attention they've been getting, then I saw this as maybe a little opportunity to buy a dip on NEO. I only bought 1 share, and the reason why is because I truthfully hope that their dip, well, and this is selfish, but I hope their dip continues a little bit so we can maybe pick up some cheaper shares on NEO, because I really do like NEO on the long term, but I don't want to fork up the premium over $50. But with them dipping today, I couldn't not buy it. And then of course, last but not least, I picked up AMC today on the dip for $55.96 a share. Let me show you kind of why I picked those guys up today. So if we look back on our chart here for AMC, we can see we kind of trade in this little channel here that I've drawn. I see us that we peak up to about $60 or $59, and we have a floor of about $52. So right now we're kind of coming down and downtrending into this floor, and in my opinion we hit the floor today like we do in the past. We usually only kind of touch it and then we return. So I'm hoping that next week on this AMC we see it start to do its return, and maybe we can even break out a little bit. And basically I'm just gonna hold AMC. We're gonna see what it does. If it does the super gamma squeeze, that's awesome, but I'm just not selling. Okay guys, so now let's talk about 5 stocks, 5 hot stocks at that I am watching for this very next week. Gonna try to maybe get a position going on them if I can. So very first one out the gate is ChargePoint. We've had some really great activity with ChargePoint throughout this last week. In fact, a little too great of opportunity for me to really want to get in there and be trading, as I feel we were a little heavy. Today we had a nice pullback, and I'm kind of hoping that tomorrow's unemployment data is enough spookiness to see this drop some more. I would feel more comfortable entering in around this point right here, this midpoint of 31.36, but really I'd rather be buying it down here at this floor level of around $26 or $25, but truthfully, I just don't see that happening for ChargePoint with their recent deal with Mercedes and all the good news coming out and all this information on the infrastructure deal. I don't see them coming back down to this floor level, so I'm really hoping that we can hit this 31.50 mark, and if we do, I'll be picking up shares for sure. Okay guys, the very next company that I'm watching is PLL, that's Piedmont Lithium Company. These guys actually have a deal with Tesla to be a lithium provider. I've been watching them in my own personal account for quite some time. Again, if you want to see any fundamental deep dive on these guys, let me know down in the comments below. I'll be happy to make a video on them. But in my opinion, they just barely solidified a really big movement here. And the after hours not showing it as well as they did earlier, but I saw these two bull flags coming in over this last little while, and we finally busted out of this 76 resistance, and then the very next day we held it and actually solidified it as a new support right here on the 30th. So in my opinion, now we are able to be trading in this next range, and we could possibly see it fill up to 80 bucks. But now after hours that it's dropped under this 76.50 resistance, I'm definitely going to be watching it tomorrow to see if we wind up getting rejected out of this. You never know. When we're just testing these resistances, it's really hard to know if it's going to stay up here until we have a couple of days to confirm that this is now the new support. Based on the activity that happened on the 30th, I would say that it's a support level, but with what's going on after hours, who knows? We could very easily trade back under and be back to having the 76.50 be a resistance again. Alright guys, the next one is CLII. I'm watching these guys as well. We currently have a position on them in the account a little bit higher, but I'm definitely looking to add to some shares, and I'm also really interested to see what happens tomorrow when they start trading as EVgo. That's the whole purpose of us buying this stock in the first place, is I'm very bullish on EV charging, as you can probably tell from my charge point pick. Charging for EVs is something that's gotta be scaled up massively. So anything that is charging, I'm pretty bullish on. And EVgo has a partnership with GM, so I foresee EVgo being a rather large name in the EV charging space. So I'm bullish on CLII right now, going to be trading as EVgo just tomorrow actually. So what I would suggest doing is looking for a good entry point on these guys. They're looking to rotate a little bit here in the after hours, so they might be preparing for that merger to happen tomorrow. But if the merger happens and we get a whole big sell-off for some reason, I'll definitely be looking for a bottom signal on that, and I'll be trying to pick up some more shares as I am bullish on EVgo. Okay, next is Coinbase. I'm watching Coinbase as I feel like we are probably at the very bottom of this thing, and this guy has just been getting destroyed ever since IPO. Now the way I've been watching this though is more by watching what crypto is doing, as I feel that the way that crypto behaves interacts a lot with these crypto miners or crypto brokers in the stock market. So right now, as you can see, we have flattened down here, and I believe that we're probably getting a pretty good entry point at 241. The reason why I haven't actually picked up any shares on this in this account is because I can't. Well, I could, but that would be essentially 25% of the account value, and I don't want to do that. That's just a little too large of a stake. It's a little bit too large of a stock for me to own in this $1,000 account, but definitely keep it on your radar. If you have some more money, more than $1,000 that you can play with, and maybe you could get a 10% position in this guy and use that instead of HUD-8, then I would definitely suggest it. I feel like right now is a very good buying opportunity on Coinbase, and if you buy today, I feel like in 2-3 years, you're definitely not going to be disappointed. Okay, continuing on, the next one that I'm looking for an entry on is Enphase Technology. I love solar, I love renewable, and I do truthfully think it is the way of the future. I'm super bullish on it for the next 5, 10, 15 years of energy. And so what I'm looking for is we've started this little inflection point to the downside. I would be happy to honestly pick some shares up down here at this 177 level, and I'll probably start a position at this 177 level for the channel if we can hit it. But I am going to be watching it on that resistance line. I want to see if we start to get any type of a flattening on that line. If we do, I'm going to be picking it up, but if we don't see any flattening and we just seem to bust right through it, I'm going to watch to see if we return down to these 144 levels. I highly anticipate that we won't. I really do expect us to use this line right here, this 176 as a resistance, as these companies, the SunNova renewable energy companies, have been in favor ever since this infrastructure bill has came to a deal. And so I really only expect them to come down mostly to this 176 mark. And I hope that I get lucky and get the opportunity to buy a stake in this company for the channel. Alright everybody, so that's basically everything that I wound up doing stock-wise this week. Again, let me know down below if you do want to see an individual video on any of the stocks that I mentioned just now, or any of the positions that I have in the account. I'd be more than happy to do a video going into the fundamental analysis or technical analysis on any of those companies for any of you guys. Just let me know down in that comment section below, and while you're down there, hit that subscribe button. Alright guys, so jumping straight into the news that has happened this week so far. So very first thing I want to mention is that Cathie Woods is supposedly going to be opening up a Bitcoin ETF or a cryptocurrency ETF. There isn't a whole bunch of information yet on that, but we do know that Cathie is trying to get one of those going. So it's definitely something that I find interesting and that might affect the cryptos in some way, so I'm definitely just keeping my eye on it. The next thing is that we were talking about the Case-Shiller Home Price Index report, and that data did come in. We did wind up seeing that rise 14.6%. So we are seeing that houses are getting more and more expensive. That's no surprise to me. I know in my local area, then we're just seeing home prices go insane. In fact, I'll be making a video on that very soon about how much my home that I currently live in has appreciated ever since I bought it just in November. And it is gonna be a crazy video, but definitely watch out for that. So hit that subscribe button down below if you do wanna see that video. The other thing that was super important that happened this week was that they came out and said that the 5-year break even is indicating that we are at the peak of inflation right now. So the other thing that's going on this week is we are seeing a rise in oil prices. So I'm sure that you guys have all noticed it. I know that I've definitely noticed it, is that gasoline prices are definitely also rising. That's part of the inflation, I guess, that we're all within, that we're all feeling. But I know that oil is up to $73 a barrel as of right now when I'm filming this video. As of Wednesday, like I was mentioning earlier, that was the end of the first half of this year. And one big headline that we did get out of that is that this was one of the biggest first halves of a year that we've had ever since 1998. So that shows that we really have done a lot of recovery out of COVID. And to me, that just kind of sparks a little bit more enthusiasm about this next half of the year for investor sentiment. I think that we're going to continue to see the tech rally happen. I think we're going to continue to see all these bigger growth companies continue to rally into the end of this year. And then, you know, as we get closer to the end of the year as well, we're going to really find out how this cookie crumbles, if you will, the inflation cookie, how that really does wind up happening for us, if we really are going to be experiencing more of a long-term inflation, or if this is just more of a short-term inflation and the Fed is right. All right, so now let's talk about what news you need to be watching next week. So very first thing is that the market is going to be closed on Monday for observance of Independence Day, and then we're going to get straight back into it with the ISM index coming out on Tuesday. So the ISM index, we want to be watching that because it is a direct measurement of demand. Basically, anything that's over a 50 means that the economy is expanding, and anything below a 50 means that we are contracting. Or in other words, the economy is getting slower or smaller, right? So we definitely want to watch that as a key measurement of the economy. And again, that is on Tuesday. And if you want to know what the previous month's report indicated, we were at 64% last month. The only other thing that's really happening next week that's super important that you really ought to keep your eye on is the FOMC, or in other words, the Fed minutes, are coming out on Wednesday, so the day right after the ISM. So of course that's very important to watch, as it does indicate what policy the Fed is thinking about setting in place. So definitely want to watch that. So the other thing I'm really going to be watching this next week is the crypto space. I really do feel like we might be getting ready and primed for a run, hence why I bought Dogecoin in the very first week of this series. But at the same time, we have seen a little bit of softening on that run as well, at the same time as we've been seeing this tech run softening just a little bit. I do feel like we could potentially still see a run for the rest of this year in crypto, and I don't want to miss out on it, which is definitely why I have some exposure in the account right now, but I don't have a whole lot of faith either that we're going to the moon yet. So definitely keep an eye on the crypto. We want to see how that continues, this little bit of softening that's happening alongside with that tech sell-off that we're starting to see just a little bit. All right, everybody, I hope you all have a profitable week ahead. I'll see you back here next week for another episode. Again, do me one last favor and go down below, hit that like button, hit that subscribe button, and hit the bell notification so you get notified when I post a video like this every single Sunday. And we'll see y'all next episode.